Your first idea is Polaris Renewable, PIF, in Toronto. Remind us what they're all about, please.
So Polaris is a independent power producer with all green power. That's the biggest part is geothermal power. They also have hydroelectric and solar. And it's a company that started with a great geothermal asset in Central America and has now slowly over time expanded. They have investments in 5 different Central and South American countries, all producing power or in the process of building those projects, and it's becoming increasingly diversified. And meanwhile, the market is just kind of, because it's a small cap, it's totally ignored this thing, despite the fact that it pays a great dividend, 3.6% dividend yield here, trades about half the valuation of comparable independent power producers. So, you can go in, you get paid to wait with a nice dividend that'll probably increase over time. And then, it's run by a good management team that is continuing to build out the company using the excess free cash flow within the company. They add new power projects every year. And we think over time, this just continues to grow nicely. And it's a potential takeover by one of the larger guys who have stocks that trade at 2 and 3 times the valuation of this thing. So to me, it's a great stock to own.
Tourmaline Oil, it's such a darling among investors. Are you not concerned that all the money that's going to go into it has already done so?
Well, Andy, all I can say is the biggest mistake I see most investors make going, oh, this is already up a lot. I got to sell it now. It's gone up too much. And, if you said that when you bought Microsoft in 1995, after it was a 10-bagger, it was the biggest investment mistake you've ever made in your life. And so you can't just because something's gone up a lot, you can't sell it because it's gone up a lot. You have to look every day at, okay, how much free cash flow can this thing generate over time? And, again, despite the fact that Tourmaline's gone up a lot, if you look at how the earnings and free cash flow generating power out of this business, it's amazing. And again, I made the comments earlier. I think we've come out of a 12 to 13 year period of depressed North American natural gas prices, where in Canada, for a large part of that time, we've been selling gas at $1 to $2 an MCF. Well, now we're probably into a period of $5 to $10 an MCF, and it makes a monumental difference to the results of these companies and how they are going to end up being valued. And so, like Tourmaline has gone up a lot. We've done really well with the stock, but it's still one of my biggest holdings. And I would continue, if I did not own it today, I would buy shares here today. It trades at about 5 times cash flow, has about a double-digit free cash flow yield. And look, they have a base dividend yield of only 1%. But if you look at, they just paid a $2 special dividend this quarter. The special dividends make the yield more like 10%. And I'm going at this environment where people are complaining, oh, I don't get enough yield off my portfolio. Well, here's a perfect example. Now you have to be comfortable with, the outlook that I have for commodities. Again, I've been investing in commodities for 30 years and telling you, I think this is the best oil and gas investing runway I've seen in my life. And so, I would own these stocks and buy them here.
Your next idea, Suncor. Do you feel that the shares are still weighed down by the poor safety record of the company in recent years? Obviously, Mark Little, the CEO, departed.
Yeah, it's unfortunate, and that clearly the recent death again was another knock against the company. But again, these are generational assets. Like this is one of the biggest oil producers on the planet, and these are some of the longest life reserves out there. And in this environment where we're going into an energy crisis, these assets are vastly undervalued. And you've had a couple activists get involved in the stock now who are have come in and put a lot of pressure. And unfortunately, the CEO had to take the fall for this accident, which is it's tragic. You never want to have someone die. And clearly there has been some issues with their operations in terms of safety, but I think they will get that straightened out. Again, Canadian companies are top of the world in terms of their safety records, and every time we have an accident, the companies are in there figuring, okay, what happened here, and how can we prevent this from ever happening again? So I think, you'll see things get so much better there on the safety side. And that's really the only black eye on this company, is that and the low share price. And so, but the low share price is an opportunity, because again, this is a company with a 20% free cash flow yield, and it's got some of the best assets on the planet. So, it's absolute table pounding buy here.
A table pound.